Candle by candle market psychology on the ES Futures back again for another day of fun. In our market psychology candle by candle series, we narrow into each candle and how it moved to understand what the market's doing and why. Hey there, John Henry here, Slingshot Futures Trading Group, SSFTG. Welcome to the video. I'm going to be going candle by candle on the S&P futures to learn and understand why the market did what it did so that we can better ourselves and come back tomorrow as more refined traders. Real quick before we jump on in the action here, hit the like button below the video and make sure to subscribe to the channel too so you don't miss any of the new content coming out almost every single day. If you want to see how we implement this strategy during live market hours, make sure to register for a 1-week trial to the VIP live trade room. It gets you in the room with the rest of the VIPs to see how we do things every single day. Sign up today so we can see you in the room tomorrow. So let's jump into bar 1, shall we? Starting off at bar 1, first off, we have to do our first candle analysis. Before we can ever hope to trade anything, we need to know what's going on, right? What's happening from the previous day, what's all moving around, etc. So the first thing that we need to see is, where did we open up? The market opened up from yesterday's close, which was up here, to the open, which was way down here. Now, this is obviously a gap down, but it is inside of yesterday's price, yesterday's low and yesterday's high, so this is an inside gap down. Now, that doesn't necessarily mean that the bears are winning the fight immediately out of the gates, and in fact, the first candle of the day would kind of tell us to not believe them anyway. But where are we opening up in general, right? Yesterday's rally higher was pretty extreme, and if we look at the overall move to the upside, we have the first measured leg up into the second measured leg up, which did blow off the high just a little bit towards the end of the day there to close off into the high. But now we're opening up right into that leg once again. And the only thing that we really have to work with is the previous pocket of wicks right here. That's really about it. There's a nice bear bar here, but there weren't any bears that got trapped in there. And the last time we had any trigger underneath the bear or any candle was here. And that's not going to get any seller involved either. So this is a scenario where they don't have a whole lot of support. And if the market can't hold it up here, then realistically, they're going to have to start pushing a little bit further down. There is that minor little support level with that swing low that was created here, but otherwise, the only other point is all the way down close to 4270. So if we mark these areas up, let's mark up the pocket of wicks first. That's the first zone right there. We do also have a brick bottom candle, which the S&P loves bouncing off of for scalpers, so we'll mark that up too, just to keep an eye on it. Then we also have the previous zone, which was right there. And then the last spot, which would be right down here on the last pocket of wicks. So we've got a couple areas of interest if the market does want to go a little bit further down. Now, as far as resistance, we don't really have any resistance because we opened with an inside gap down. They opened inside of the leg higher. So we don't really have anything to work with in terms of resistance aside from settlement and the swing highs. That's about all there is for the sellers here. Now, the first candle of the day, we're opening up relatively weak, the body closing smack in the middle of everything and basically right on top of that previous pocket of wicks. They were not able to close down, but the market is not also doing so well here either in the middle of no mansville. So a lot of traders seem to be kind of waiting. They're not sure where the market wants to go, and that's very obvious given the back and forth sideways candle that we've got here with the spinning top. There's just as likely going to be sellers above the high as there will be buyers underneath the low with this kind of scenario, because nobody really knows which way the market's going to go. It is a nice inside gap down, right? So the sellers do have a bit of emphasis, but that's about it. So with such a sideways kind of choppy, sloppy candle, we're left with one of two decisions. We either have to look to fade the top or bottom of this candle with a risk that's way up at the top or way down at the bottom, or we have to wait for a bit more info. I like waiting for a bit more info, so we have a cleaner idea in terms of what to expect. The next candle tries to bounce further up, but it obviously falls flat on its face. That did not succeed in the least. When the bulls tried rallying up, in fact, the only thing they were able to do is come back to the previous pocket of wick. Well, it was supposed to be support, but now it's resistance, shoving the market right back down. And just like we were talking about, sellers are selling above the candle's high and probably going to be buying underneath the lows. So the fact that we've seen some excess proof here, that does likely tell us that it would make sense for sellers to reject back off a retest of this level. We have the sellers who faded off the swing highs of bar 1. They've rejected off very nicely with a beautifully weak close, and now sellers can cycle this back down off of a retest. We do have some concerns here because realistically we have one of two scenarios. If the sellers are going to short here, then they have either a stop above the high, which is very low probability, so they're going to need to go for a larger target, and this simply doesn't fit a 2-to-1 down to the lows, so they're either going to have to be scalpers or look for even smaller entries, or there's sellers who are going to be risking a lot more, way up at the high. We're going to have to pay attention to both sides of this because, well, that's going to give us an idea in terms of what to expect if they want to trigger to the downside. Downside objectives from the widest perspective would give us targets right down at the base here. So that becomes a pretty interesting spot if the sellers do trigger back in off of this 43.50. Now, if the sellers aren't able to rotate back up and we start cycling back down and break lower, then we've got support just underneath the market that may cause some problems for them. And the buyers, well, I mean, let's be real here. Buyers aren't exactly too enticed to buy this kind of movement. Going into bar 3, we can see a rejection off of that resistance zone and a phenomenal rejection. Now again, depending on how they want to play this, they may or may not have been taken out already. If their stops are above the highs, if they put their stop above the top of that bar and their entry point was at, well, right at the entry, then we've got their 2-to-1 targets, which are right there, and we can see that the market did not close underneath it. They're having a little bit of a hard time. Now, with this strong of a bear bar and this amount of rejection down and the fact that this is basically creating a new pocket of wicks for resistance, well, we have to kind of believe the sellers have some gumption here. It's pretty realistic to assume that at the very least they can get down to some of these previous inside targets and maybe even span out to some of the wider ones down here nearer to the 43.05s. Now, the bears may have an opportunity to sell underneath bar 3 to look for a continuation down, but that would be selling directly into support on a couple different levels, and it's going to be a little bit difficult. There's nothing necessarily wrong with it. It might work and it might go, really well, but you have to look at the risk parameter, and it's either risking here for really low probability and directly into support, or you're risking way above the highs. It's just not very favorable for the shorts where it is now from a swing perspective. It's more likely, if anything, stops above the highs, sellers underneath the lows, looking for scalpers targets down into that previous area of support that's already there anyway. Now, we do have a very nice bearish follow-through with a continuation, and with such a strong bear bar, it's very, very likely that we have continuation. But to add to that likelihood of continuation, we can see that it closed under not one, but both of those levels, and it did it all in one candle. One huge move to the downside. So sellers are breaking down any amount of support that the bulls had here, and the only thing that's left is down here in the 42.80s down to 42.60s. It's a wide open door. We don't necessarily have any candle gapping yet. The next candle will have to give us a bit more of a clue. But as it stands, with this kind of bearish formation, it's very likely that sellers are going to be looking for any kind of retracement that they can get their hands on. The current candle close is back here at 43.04. The last point of support was, a little bit further up at around 43.1250. Otherwise, a little bit above that at 43.20. Maybe that's good enough for the sellers to step back in. Otherwise, selling above this last bear bar's high, or even a retest of the bear trigger, could be a nice little spot for selling resumption. Almost no corrective phase whatsoever, and in fact, none. It's just another bear bar right back down again. These bear bars do confirm two things. First off, whenever we have 3 incredibly strong bear bars back to back to back like this, that tells you that it's probably going to go further. There's a very, very good likelihood that the sellers are going to continue down for at least one more leg whenever it stops going down. The second thing is that we have a candle gap to the downside, and we know where the market is likely trying to reach down to. We can take our measurement off the top of the candle down to the candle gap's high, and we can see that the measurement is, hey, crazy, right in the spot of support that we were already looking for at 42.75.5. It's starting to stack everything all in the same place. Previous bears who got stuck, bearish targets on the new day. We've got bulls who are looking to buy the low, and they're all looking to do it in the same spot. Doesn't matter if it's a seller, if they're exiting, a seller exiting is still a buyer, if I can get that out. So downside continuation is what sellers are looking for. Any bounce that they can get, they would love to, I mean, anything. If they, especially back in the 43.11s, that would be incredible. Or it does nothing. We have an inside bull bar, which is just stuck, not really accomplishing much. An inside bull bar, I mean, realistically, the bears are in control very heavily. If it were going to go above this bull bar's high, then sellers are very likely going to pressure the market right back down again. We have to ask ourselves, though, where are they going to put their stop? If they're going to be entering into the downside, they're either putting their stop above this sequence of bear bars, because that's what kind of kicked everything off, or they're putting it above the highs way the heck up here at 44, 15s, 12s, somewhere up here. So I'm going to measure it off of the narrower side of things and see if they can get an entry off of that, and that would give us a target, which is right back down once again towards these lows. So we don't know if they're going to actually trigger or not, but if they do, we can see that everything is telling us that we need to be careful if the market starts pushing down here. We've got previous support, and now there's a lot of sellers' targets that are starting to line up here, especially if we can trigger more in. Which is exactly what they did on the next candle. Wow. Now, it's not only did they trigger them in, we got a monstrous bear engulfing candle right back down. Not only down, but selling above the previous bull bar's high, which is where we would expect sellers to come in. And not just selling above the previous bull bar's high, but dunking it straight down into the target area. Once it hit the target area, the market could not close underneath it. We've only hit one. We haven't hit the other. And chances are, with this amount of downward pressure, like we said, we should see another cycle to the downside. And, well, right now, we still have a little bit more to go. It looks like we've got some targets. We haven't hit the zone of support. It's very, very close, but with this kind of bear bar, it's likely we get a bit more follow-through. Well, likely. Just because it's likely doesn't mean that it has to. And here we can see that the sellers were technically missed by what looks to be about one tick. It seems like a John Henry special right there. As far as the overall downward momentum, we have sellers rejecting off the highs at 43.02 as anticipated. They hit the first objective as expected, but they missed the second target, and now we've got ourselves another bull bar. Realistically, we have a couple things that are taking place here. We have a very, very nice bear bar, and it did trigger the sellers in. Now, unfortunately for those sellers, they were triggered in directly into a support zone. If they were planning ahead, maybe they would have seen that, but, well, unfortunately, if they weren't in the VIP room, maybe they didn't. They've got some problems, right? They ran directly into support, and they got a little bit stuck. That doesn't mean that the sellers have to totally jump ship and get out, right? But what that does mean is that they're going to be a little bit nervous. A bear doesn't want to get in and realize that immediately after getting in, they're wrong. And not only are they wrong, they're wrong in a big way. They were barely ever even right. So with this kind of scenario, we really need to watch not only some of these targets for a retest down here, but more importantly, the bears who triggered in underneath this bear bar. If they're given a chance to get out at break even, and they take it and it bounces off of it, that could be a big clue that this sell side is running out of steam because of this support. Right now, if the bears are able to close underneath this and try, drive down just like they did over here, then, game on. We're ready to keep pile driving down to the lows. The next zone of support would be down here at around 42.20. maybe a little bit of structural support at 42.42, and again, a little bit underneath the lows at around 60, but that's about all that we've got to work with, and they're very, very narrow, little bitty tiny zones of support, and the market seems to chop through those pretty aggressively. Now, man alive. Now, the next candle is a lot of things. What it isn't is helpful for the bears. This did absolutely nothing for the sellers. If the sellers were looking for a continuation down and they were triggered short, they weren't even given a chance to get out at break even. Now, again, this doesn't mean that the sellers are, horribly scared and terrified and need to exit. We've still got really strong movement. But this is concerning, right? Bears don't want to see this kind of movement. This isn't good. Sellers want to see it go down, and if it does pause, it just goes sideways a little bit and go back down again. Maybe this is a little pause here, and we see another rejection down. The problem is now, though, if it rejects down, now they've got support that they've got to deal with. They're creating their own problem, and it's becoming a self-fulfilling prophecy. Now we've got another really strong bull bar closing on its highs, and that certainly isn't helping the bears in any way, shape, or form. Now we've got another bull bar, and it may not look like it's worth a whole lot, but there is something that's kind of hiding behind the scenes here in this little candle gap right there. Let's see if this candle gap is closed or not. We'll go down to the bottom, and we can see that the candle gap objective is not closed. They have a little bit further to go until that is completed. That suggests that the bulls still have some unfinished business to go, and that also means that buyers will be looking to buy a dip if they can get it. The previous bull bar is low, knowing that we are bouncing off of a major zone of support, and the sellers are possibly getting trapped down here. Buyers will be looking to utilize some of the weakness of this bull bar and the backup support of these really strong bull bars as a way to bounce the market back up again. So buying underneath this bull bar, first off, is a terrible entry for bears, and second off, is a great spot for the bulls to get in with a beautifully reduced risk. It's a 1-2 punch. We do get a bear bar down. The bears do trigger in underneath the last bull bar's low. They do not close underneath the last low, and even more importantly, we have further confirmation that the candle gap is still there. It may be a little bit less perfect, but we do have that candle gap which is still there, suggesting that the targets are still just above the highs. It hasn't closed up completely, which means that we've got some upward targets, and if we look backward, that also retests some of the previous gap targets too. So there's a lot of stuff up here which is kind of magnetizing the market up, and when we add on top of that the fact that the bears miss their objectives, they've got some issues. Now, before, when we initially tried going higher, they failed and rolled down. Let's see what the overall volume looks like up to this bear bar here and see where we've got some balance. I mean, as if we needed another reason for the bulls to be coming in and the bears to be failing. The POC is directly underneath the last bull bar too. Everything is there saying that the bulls should gain continuation. The bears are going to be getting more and more and more nervous as this keeps going. And this weak bear bar, this isn't going to help anybody on the sell side. Yeah, and there's the release valve. Holy cow. So the sellers did obviously jump ship. They got annihilated, ripped all the way up, very obviously filled some of the candle gap targets. They went a lot further than those candle gap targets. One thing that we are kind of seeing here is we're retesting the previous bear bar's entry. Now, I do know that sellers, and we were talking about sellers selling up here and fading the top, but this is also a really nice bear bar, and sellers retesting that break-even point to drive down. Well, they closed all the way above it. That's not good. So we have the same situation, right? If the sellers were trying to get something going here, now they're possibly underwater. Maybe, right now, they probably had their stops above the highs, their entries underneath the lows, and the only targets that they've been able to achieve are the half-to-ones, the one-to-ones. They have not been able to get the full 2-to-1. And now, it's underwater. That's going to be a little bit troublesome. We very much need to pay attention to that break-even point because that's where the earlier sellers tried coming in. And if it starts to fail getting back underneath that, then maybe that may be a clue that they're jumping ship, and the bulls, which we already know, are getting even more squeeze momentum to the upside. Oh, wow. All right, well, that candle is, that tells a story right there. The sellers tried doing everything they could after a humongous bull bar to the upside. Nothing. Totally nothing. Huge candle gapping, and I'm going to use this previous candle's high, not this little bear bar. I'm going to use the bull bar's top up to where this little inside bear bar is here. And that would suggest that we have upside objectives at the moment, now spanning even further all the way up to the top of the range. So there's a lot of things that are suggesting that the market may want to creep its way a little bit further here with this little bear bar not being able to close back underneath the break-even point. There's so many things that are stacking up on this spot. It's ridiculous. Okay, now we've got a little bit of interesting back and forth going on here. We've got a lot of whip up and down, a big engulfing candle, and they even closed in some of the gap. We could even kind of consider this somewhat of a negative gap. Technically, that last candle still is open, but realistically, if we were to measure this, it's done. Job's already complete. The bulls obviously did not want to see this, but in the context that we've been given, the bears have been stuck since down here, and this candle isn't exactly proving anything on the sell side. Well, I suppose it is proving a lot of weakness. Yeah, it's a bear engulfing candle, but the body of this thing is almost non-existent. And when we compare it to the previous bull bar, this thing looks like it could use some whey protein and some bulk and uptime here. Looking for the bulls then to try to gain continuation back to the upside with the understanding that the bears are a bit underwater. We're also going into the 11 o'clock time period, and the upside objective back up into this pocket of wicks at the top would be a likely spot of interest. Very nice bull bar back to the upside. Now, the candle gap is still open. Obviously, it's been already filled. The targets are done there. But we can see that they're trying to create a new pocket of wicks down here. That may be a secondary supportive zone that we can utilize in future, but the market is creating a nice bull move to the upside. The issue is that the buyers are, well, directly into resistance. We know that the sellers now, especially, have been given a chance to get out at break even. And if they didn't take the chance to get out at break even, the next time around they very, very likely will. Only really if they start breaking above this. If you're a short, it's been working out beautifully all the way down, you're a little underwater, who cares? Not that big of a deal. But if it breaks above the highs and invalidates you, now you've got problems. That becomes a much larger potential for exit. All depends on what they want to do here on the next couple candles. A little bit more bullish continuation and starting to dig into this zone of resistance. We're also testing into bar one's top, which we already know is a very nice area of resistance. The market's pressuring back a little bit and unable to close above. Something to consider, especially considering that that's where the sellers really kind of took this thing off to the floor from before. Now, the bulls are defending this area. We've got some nice support coming up, but now we're narrowing into resistance. We've got ourselves a bit of a back and forth fight. Sellers are still likely to be selling up here because they have not been disproven and their risk is very light. But we're also seeing proof from the bulls. We're going to have to wait a bit more to see what the buyers want to do in order to get a better idea as far as the overall up or down. Do the bulls win or do the bears win? So far, neither side has really broken major structure. Now, we do know that within this back and forth here, we've got a lot of support and a lot of resistance. Depending on how they want to play this, we might be able to start mapping out how they want to play this. Okay, that might change things a little bit here. We've got a bear bar right back down. Beautiful rejection out of this. And again, it's another rejection point directly off of the top of this first bear bar. I mean, almost perfect. So the fact that they're cycling back down again, where do you think we're cycling to? Well, chances are we're going to be cycling back down to the earlier sellers' break-even points. But remember, right, this isn't like the sellers lost. This was a really, really nice trade to the downside. The sellers had a beautiful drive down into support. Yeah, it might not have completed all their targets, but certainly some of the targets along the way. So one thing that we do have to kind of keep in mind is the potential of the market to want to cycle back down and to get what I like calling greed targets. A greed target is going back down and saying, you know what, this was where the scalper's target was first. I'm going to go back down there and get it again anyway. Who cares that we lost, right? Who cares that the trade is now in the negative? It was a winner, so it's got a much more likely probability that it's going to slide back down there. And what makes it even better is the fact that we've got that target directly on the low of that pocket of wicks. What a phenomenal zone of interest for the bulls to try to creep in. Now, if they do want to start creeping in, if they wanted to keep their stops underneath the low and they were to buy at the bottom, a 2-to-1 target would be off into the sky. It's going to be a little bit challenging. Yes, there is a lot of support here, and these buyers, if they do show up here, will likely be scalpers. But if we do want to find the most likely, the highest probability, then we're going to need to narrow this down a little bit with the understanding that if I want a 2-to-1 target here, I'm going to have to buy here. And that lines up a lot better with that lower POC. So let's take a line on this and we'll see what they want to do. We'll put this on the 2-to-1 area of interest. But again, we can't lose sight of the fact that the bottom of this pocket of wicks is going to be a nice zone of interest. We could alternatively keep this thing churning to the upside and keep this really, really nice tight channel ripping higher and just keep popping. If we break above the highs and no remorse, never show up, and the sellers don't have anything, then it's going to be game time. The bulls have a very, very good chance to close all the way up into settlement, or at least back into some of this previous structure that we had going into the end of the day before they went sideways. Lots and lots of things could happen here. We just have to wait and see how they want to play ball. The fact that we rejected resistance so nicely kind of gives us a clue that this channel might be a bit shorter lived. And it is. Very nice bear bar to the downside with some bearish pressure. We're digging back into the shelf support, but remember, the larger support is at the bottom. Yes, this zone is an area of interest. It's a zone of interest. And I'm sure if we measure it, we'll get some kind of bounce inside of here that will be of some substance for scalpers. But realistically, the actual level is going to be more towards the bottom of that to trigger it in. Little bitty bull bar. And what's interesting here, with this little tiny bull bar, we still have candle gapping to the downside. These candles are pretty big, and if we measure these candles up, that would tell us that we've got downside objectives right down to where we're looking for the market to reach to anyway. A lot of things are starting to look pretty interesting here. Now, from a bull's perspective, if a buyer is going to come back in on this and try to get this going in off of the support zone, this would be the first time that the market's trying to go up, and buying in when there's very obvious known candle gapping to the downside seems like a great spot to get trapped, especially noting that we are back below the previous bear's entry point. This seems like it's a challenging bull spot. If I want to be a buyer here, what might be a more beneficial thing, instead of buying above the bull bar, which, to be fair, is a viable option, I just don't think the probability is there, would be to wait for a bull bar to close above, right? Show us that they're here and then try to get an inside pullback, get the dip, and then get the rip back up towards the highs. It would make a lot more sense to look something like that, and that would give us the proof. Otherwise, this is a really, really challenging spot. We are also running out of time as far as 11 o'clock goes. This is when things start getting a little bit awkward. We know the bulls are waiting below, but now we've got resistance above the highs. Oof, and now we've got a bear engulfing candle back down. Technically, they did break through some of the support, but remember, the support level was right at the base. That was the hot spot, and the market could not close underneath it, at least not yet. It is a bear engulfing candle, so they've got a shot. Now they've got to close underneath it, so we've really got to see how far do they go. Is this nothing more than an attempt to reach out, grab the objective, and bounce? Or is this a lower high start to a breakdown to get this thing rolling lower and get another really strong bear trend? We're starting to see the bear candle stack. And just as soon as he says that, gigantic jumbotron of a bull engulfing candle right back up again totally shuts down the seller's thesis. If the sellers were short and they were looking for this downside objective, you remember the max greed targets, and the bottom of the candle and everything else. Well, if they weren't sure if that was where they need to get out, they're sure now, right? There's no questioning now. If the market comes back down here again, very likely we see them hit the exits and we get the next bounce. Time of day is also incredibly awkward going into lunchtime, so let's speed it up and see if they want to play ball. Wow, really? To the tick off of that. Rejected back. Do they want to give it? Second attempt. Now they're starting to break up. Ooh, there they go. And then they roll all the way up into the end of the day before they give it up. And where did they stop? Right at the end of the day, directly on top of it. You can't make this stuff up. So that's going to do it for this one of candle by candle analysis on the S&P futures. Hopefully it shows you why it's so important to go candle by candle, because it's a phenomenal way to learn and understand what the market's doing and why it's doing it. Who's in control, where the buyers are, where the sellers are, and what they're trying to do. That gives us a really, really good idea to gauge where they're trying to go and where to expect potential reversal points or continuation points. If you have any questions along the way or suggestions for other video topics, feel free to drop them in the comments below. But until the next one, thanks for watching, and we'll see you until then. Thanks. Bye.